Hello and welcome to another cryptocurrency analysis video. In this video we're going to talk about XRP and I'm going to give you guys some price targets. We're going to talk about technical analysis. We're going to run through the importance of correlation and have a look at the Bitcoin chart and also the Stellar chart. Now we're currently looking at the weekly chart for Ripple. So that means that each candlestick represents 1 week of price action. On a green candle, this is where price opened for the week. This is where price closed for the week. This is where price went up to during that week. And this is where price went as low as in that week. And then a red candlestick is the reverse. So price opened here, closed here for the week, went down as far as here, went up as high as here. So we've been currently moving through the worst correction of the crypto market in its history. I mean, it's understandable. You know, prices went to crazy levels just after Christmas. A correction was inevitable. But what that does allow us to do is to get in at a much cheaper price and potentially see a huge return on investment. So let me just explain a few of the lines on the chart. So we have our Fibonacci drawn out, which is from the highs to the lows. Now, if you don't know how to draw your Fibonacci lines, just have a look at one of my Bitcoin videos, or you can click the link below this video and it will take you to another video explaining all about how to set up Fibonacci and how it works. Going back to this particular video, as I said, we've got the Fibonacci from the high to the low, and you can see here's the 38.2 fib, 50% fib, 61% fib. These black horizontal lines on the chart are where I believe the support and resistance, or we will get a lot of support and resistance. As you can see, this line here, price has come up, hit this line, and then reversed back here, and then once we broke that line, it then acted as support, and when price dropped below this line, it quickly got bought back above this line. We've subsequently dropped below these support levels down to the bottom of the trend again, but what we are seeing is that the weekly volatility is becoming less and less. So as you can see, the volatility here was huge in terms of price swings on a daily, weekly basis, and then obviously coming across on the downtrend, the volatility was really large. We're seeing really big, strong red candles, but now the candles are obviously a lot smaller, which means that the price volume and volatility has reduced. What we need for price to move on from where we are is for the market to be in a relaxed state. We currently are seeing a double bottom on the Ripple market, and this could be seen as a reversal pattern and potentially see this cryptocurrency change the trend direction and move from a downtrend and return back to the uptrend which everybody's been waiting for. So let's look closer at this double bottom and make the chart a one-day chart. And if I zoom out a bit, we can see that double bottom in a little closer. So here we go, and you can see that the volatility is less and less, and that the price is now shallowing. So the downtrend was very sharp in the beginning, and as it's continued to move down, we're seeing these downtrends not be as aggressive as they were back in the early part of January, February. I mean, price obviously is still moving down, but it has reached a point whereby it's not been able to break, which is now a double bottom. Now we could see price continue to move down and break this level, and then we'd have to continue to watch to see where price is going to move next. But this is potentially a very significant level of support, and I don't expect it breaking this level anytime soon. Now if we look a little bit closer, we can see that we have had a cross of our moving averages, and that generally signifies that the market is still moving down. I'm not buying into this downtrend because when the cross happened, I would have expected the sell-off to be more significant. But what actually happened is that price got held up at this support line, and was the buyers took over the market and pushed the market up. We need to wait to see what happens next week, but I believe that the buyers will still be in control, and we may see a test of our next resistance level at 126. So if you wanted to buy into this market today or potentially tomorrow, here is a strategy that I believe will have you in profit quite soon after you place your trade. Now if we move down to the 30-minute chart, we can see that price has been moving in a range. Let me draw some lines on the chart so you can see this range more clearly. So here, in essence, would be the top of the range. I'll zoom out so you can see it better. It's the top of the range. So what you're trying to do is capture as many resistance and support in your line. So you can see this line has acted as either resistance or support in the past. Every time it's come to this price point, we've seen a lot of indecisive activity and then a move either south or north. So when we get to this position again, we potentially will break it, which will open up the next level of support, which is up here, or we'll go back down to our support level down here. But as you can see, this market is temporarily held up by this level of support just here. As you can see, initially price came down to this level, couldn't break it, went back up and touched our moving average lines, and then retreated from them again. It tried again and retreated, tried again, and then you saw a massive retreat from the resistance line. A little activity around this area of support, but then we subsequently broke it and dropped down to our original support level set before the beginning of the uptrend. And this is what's caused the double bottom. And as soon as we've hit that level, we've seen the price be brought up, back up to through two resistance levels, and then it went through that resistance level but couldn't hold above it, and came back down to this support level down here. Now price is hovering around here, so when would be a good time to get in? So what we want to see is we want to see a significant price increase past 73.80, 75 level. In 73, this area is the next level of resistance, and we'd like to see price move through 73. So what we need to do is we need to set an alert. So if price is higher than 75, alert me. Now once you get alerted to that signal, you would then want to try and put an order to buy this market if it comes back down to 68, 70 region. Because what you're hoping that will happen is that this level, after it's been broken, will act as support, and you will then be able to get in at the beginning of a new uptrend. Now as you can see, price came down to this level, was unable to break this level, then went up and came down to this new support level and wasn't able to make a new low. So the market is currently making higher highs and higher lows, which generally means the market is going up. So what you want the market to do is to make another higher high, but when it comes down, make another higher low, so not break this area of support. And if you were to place your stops, I know that you can't do that on this market because eToro doesn't allow you to place stops on crypto, but other trading platforms that allow you to trade crypto do allow you to place stops. I would suggest placing your stop below 55. And that way, if price does go below 55, that would invalidate this trade plan and you'd be out of the trade and waiting for the next time to get in long. Now, we all know that this cryptocurrency market is here to stay. It's going to eventually replace paper money as the way moving forward. I mean, we've already seen with the invent of Apple Pay and the ability to use your phone to touch in, to go on public transport, to buy stuff from the store. Digital currency is just the next evolution of currency. And we're now getting in at the beginning of the biggest bull run since the dot-com boom. So it doesn't really matter what price you get in at this point, because the market is going to be much higher than this come 2 to 3 years from now. The only difference is how much more you're going to make. Now, depending on your investment, I would suggest investing a small amount now, and then if price does break 55, wait for the next support level and buy more. That way you'd be averaging down your initial buy price, and your units for going up will increase. So for example, the price of XRP is around about 62p. So let's just call it 50p for easy maths. You can get in at 50p, and if you bought 100 units at 50p, that will cost you £5. Now at 25p, you could get double the amount of units. Now it may not seem much now, but in 2 to 3 years, that double amount of units could be worth over £100,000 to you. So regardless of what price you get in at today, you will only lose that investment if the market completely crashes and goes to zero, which is not going to happen. We all know that the crypto market is here to stay and that it's not going to zero. So at the moment, it's a game of getting as many units in the cryptocurrency of your choice that you want. Mine in particular is Ripple and Stellar, and I've invested around about $5,000 in both those pairs, looking to invest more if I get the opportunity. So if you'd like to get more chart analysis like this, I do also videos on ICO analysis and coin recommendations and much, much more. If you just click the link below this video, you'll be taken to another video where I will show you the best coin to buy in 2018. And I'll also keep you up to date with new analysis, new coins coming out, new ICOs. I can't say fairer than that. But I want to talk about correlation now, and how correlation affects the cryptocurrency market. But first I want to talk about the Forex market, which has been long-standing. It also has correlation. So we have something called the dollar index, which is basically the price of the US dollar. Now, all currency pairs are pegged to the US dollar. So you have GBP to USD, which is sterling, UK pounds to dollars in the US, and how the prices, how they fluctuate between each other. Then you have JPY USD, which is Japanese yen and the dollar. Now, these particular pairs across Australia and Europe are called the majors. And generally that's what I trade on Forex. But what we need is to have a directional bias. So what gives us the directional bias is looking at the dollar index. Now, if the dollar index is going up, which means the dollar is going up in value, you could expect that the GBP USD and the JPY USD and the Aussie USD are all going to be going down because they're all pegged to the US dollar. Now, vice versa, if it's going down, then obviously all of those pairs are going to be going up. Now, with that said, if we applied the same logic to the crypto market, because in essence, you can only buy Bitcoin, Ethereum, and Bitcoin Cash with your fiat currency, so your home country's money. In my case, it will be pounds. Then you have to take your Bitcoins to an exchange and exchange them for another coin. Now, in this process, obviously, you're buying Bitcoin, then you're selling it, and then you're buying another altcoin. And all these buying and selling is going to affect the chart. So that's where we get our correlation in terms of Bitcoin is the driver of the market, because potentially you have to buy Bitcoin to buy any other coin. Obviously you can buy, as I said, Ethereum and Bitcoin Cash, but the volume in people buying those coins is not as much as it is for Bitcoin. Hence why Bitcoin is priced at £9,000 a coin at the moment. So with that said, by looking at the Bitcoin graph, you can kind of gauge where the other cryptocurrencies are going to be heading. So let me bring up the Bitcoin graph. Change it to 1 day. So as you can see, the Bitcoin graph is not that much different to the Ripple chart. We are seeing the same decline in price that we saw in Ripple. And here's the end of the Fibonacci. And you can see here 38.2, 50%, 61.8. And as if by magic, Bitcoin price was able to get up to the 38.2% fib and then decline. It's now tried to attack this line 3 times now but not been able to break it. Once we break this 38.2% fib, we will see all cryptocurrencies return to the upside. And we're not very far from that happening. Now remember we talked about the double bottom on Ripple. We're not seeing a double bottom on Bitcoin. What we're seeing is the price was making lower lows and lower highs, which is an indication of a downtrend. But then it stopped making lower lows, lower highs. It started making similar highs and higher lows, which is an indication of a sideways market. And what we need to see now is a higher high and a higher low, which would indicate the market has turned. But while we move in this range, we could move up to 38.2% fib and come straight back down again and do that multiple times for the next couple of months. But as soon as we break around about 12,000, we'll start seeing this market across the board increase in value. Now the great thing about being in this range is that, I don't know about you, I don't have £50,000 to invest today, but I could invest £1,000 every month for the next 5 months. So as long as we're moving in this range, every month I can keep buying £1,000 more of whatever cryptocurrency I would like, because the price is still low. And what happened last time is that the people that were buying in this range ended up closing their positions and missed this huge uptrend. Don't let that happen to you this time. Buy now and buy more if the price drops further. And once we see the uptrend and you're in the profit, when that price dips, buy again. Let me show you one more chart so that you can see that this correlation is in play across the board. We'll have a look at Stellar XLM. And you would never know you're looking at a different chart. It looks exactly the same as the Bitcoin chart and as the Ripple chart. But we do see slight variances with the way price action has moved on this chart. But it is similar to the other charts. As you can see, price has come down to this level of support, which has not been able to break it. We broke it briefly and went back to the support levels of December, where we see this candle touched it before the subsequent uptrend, but couldn't break it. We are here again, couldn't break it, and now we're potentially going to see price move in this direction and break out of this range and return back to the uptrend. So as you can see, the correlation plays a big part. You can use Bitcoin as your directional bias when you're looking to trade any other cryptocurrency. If Bitcoin's going down, do not buy. It's as simple as that. Thanks for listening. My name's been Malachi Kelly. Click the link below to follow me, follow my story, follow my analysis, take up my coin recommendations. Hit me up in the comments below if you want me to do some analysis on any coins that you hold that I either haven't done yet. And finally, follow me on Insta so you can never miss an analysis video again. You can follow me on Insta on Crypto Expert Alert. Thanks for listening. Happy trading.